everyone, and welcome to Financial Minds. I'm Jaime Agostino. Over the next several weeks, we will be discussing the importance of advocacy in the credit union industry. Joining me today to kick off the series is John Bratsakis, President CEO of the Maryland DC Credit Union Association. So, John, thank you so much for joining me. For those that haven't met you, which I can't imagine it's that many people, but could you just tell our audience just a little bit about yourself?
Sure. So president of the association for the last 14 years now. Hard to believe. And then 5 years prior to that, I worked at Baxter Credit Union as senior VP. Before that, I was CEO of a credit union for 10 years. And then prior to that, at credit unions in Indiana and Michigan. So my whole career has been in credit unions. Just by an accident, by a happenstance, I was telling somebody the other day, went to a job fair to pick up a friend when we were in college. And I was just waiting for him. And this lady said, "Hey, are you here for the interview?" I said, "No." And she said, "Do you know anything about credit unions?" I said, "No." And she said, "Do you have a resume?" And I'm like, "No." And she said, "Well, it looks like my interview is not going to be here. So would you like to chat?" And I said, "Sure." And then 2 weeks later, I was working at the credit union. So
Wow.
that's kind of how my career got started and kind of been here at all different levels since then.
Wow. Well, talk about fate.
I guess it's kind of, yeah, it's kind of crazy.
All right. So let's start off by tell me or explain to me what the association does in relationship to advocacy.
So I think for myself and all of my colleagues and friends in our association league world, uh, advocacy is job number one for what we do. So when we look at advocacy, we look at advocacy as a whole, where we're focusing on local issues, we're focusing on national issues, and we're highly focused on elevating the profile of credit unions within the policy officials, elected officials, regulators, and making sure that credit unions' voices are heard, that they have a seat at the table so they can, influence and make an impact. But more than anything, it's about being that representative, whether it's in the state legislature, DC council, um, down on Capitol Hill, obviously, where we're down there and then we're partnering, collaborating, coordinating with leagues throughout the country and America's credit unions and others to make sure that we're staying abreast of what's happening, what regulations are going on, how our regulators are working with our credit unions,
Mhm.
but then trying to beat back bad legislation, regulation, and make sure that we're included in those things that are good for our credit unions and our members.
All right. So how does then the Maryland DC Credit Union Association engage with these lawmakers and regulators at both the state and federal levels?
Sure. Well, I think one of the ways you have to think about lobbying, right? Where lobbying came from was you hang out in the lobby. So one of the ways is to really ensure that we're developing meaningful relationships with our elected officials, with their staff,
Mhm.
with our regulators and their teams to make sure that we have an ongoing dialogue with them to make sure that we can have that discussion. This just the most recent example would be Senator Alsobrooks here in Maryland was working on an amendment to the National Defense Authorization Act on deposit insurance for small business accounts.
Yeah.
So that didn't um, happen, but she and Senator Haggerty from Tennessee are instituting a bill for deposit insurance of up to $10 million for non-interest bearing transactional accounts, so checking accounts for small businesses, payroll accounts, those kinds of things. So credit unions can compete and small banks can compete with the biggest of the big and have that insurance. Consumers can have that peace of mind. But the way that we were a part of that was the relationship we had with Senator Alsobrooks and her team. They reached out to us, asked for advice on the amendment. How would you help structure that? What would be meaningful to credit unions? We talk to credit unions? We were able to connect them with some credit unions that evening to get their feedback and having those relationships on the back end is what I think is really important. It's easy to get a picture, right? That's not what we do though. We're there to make sure that we're having relationships. So when they call and say, well, hey, how can we help credit unions and small businesses and banks?
Okay.
That's just one example most recently that I can give. But that's really it, I hate to say it's, and I say this, and you've heard me in my different talks that I've done in the last couple of years, but it's in this there's a book that I read on unreasonable hospitality, and one of the comments is that he talks about relationships, and the staff says, well, relationships are simple. And he says, but simple's hard. And that's how I look. It seems like it's relatively simple, right? Relationships. Have a relationship with your regulator, have a relationship with your elected officials. But it's not easy. It's hard because you have to be able to articulate the issues quickly, how it's going to benefit members, how it's going to benefit their constituents. And as a rule, there's somebody on the other side of the bill that's not in support of including credit unions.
Yeah.
So we have to deal with that as well.
Yeah. And I think I have heard you specifically say that relationship quote and relationships are key in anything really that we do. We know we value our relationships not only with the league, but also, our credit union members. And then you're, obviously managing those same relationships with credit
Absolutely.
unions and regulators and lawmakers. And, in kind of line with that, how do you keep credit unions in your region informed about these upcoming policy changes or upcoming regulations that could impact them?
One way we do that is it's multifaceted. So one way is something as simple as a survey, is reaching out to our credit unions and saying, okay, here's some things that are coming out. Here's some policy initiatives. What are your thoughts? Where are you at? Next is actually picking up the phone and calling credit unions that, because of our relationships, we know are in certain lines of business
Yeah.
or certain areas, whether it's, let's say, mortgage lending or small business lending or heavily into auto lending or investments. Some credit unions, as you know, in our region, have a very strong balance sheet and strong capital. So there's questions about the investment side of it and what's permissible, what's not permissible. So one of the ways we do that is we have a advocacy committee that pulls in people from the region, from Northern Virginia, DC, Maryland, Delaware, to talk about issues and to talk about position statements that we're going to take, either in support or not support of that. And then the last component, the last leg really is our communications. And, Michelle, and especially Michelle, Rory on our advocacy team, but working with Michelle's team to get the word out to our credit unions and appreciating all of the information overload that credit unions get, all of the newsletters, all the emails, and, trying to hone that down to what are the really important issues, what are the key focuses that they need to know about so they can help us make a decision that represents what their needs are.
Yeah.
So that's, as far as how do we communicate that, that's really, it's a lot,
Yeah.
but there's a lot of different ways to do that. And I guess the last thing I would say is roundtables.
Okay.
We bring our credit unions together. We were the first, this might be, I guess, not the best, it might be more of a nightmare than it is a remembrance, but when Director Chopra was at the CFPB, we were the first in-person credit union meeting that he had with CEOs. Was he came up to our offices here in Columbia, and we met with him and sat down and had a conversation. And as a result of that and the interaction with our credit union CEOs, I mean, we had a few more after that as well because of that experience. So that's
Okay.
just an example of that, along with the NCUA as well.
All right. Well, what are some of the biggest issues currently affecting the credit unions in Maryland and DC?
So a little continuation, I think, would be one of those issues would be taxation. Obviously, we just went through the big fight. Um, that's not anything new for all of us that have been around in credit unions. I see you smiling.
Yeah.
You've been here. I've been 37 years. I've been hearing about taxation for 37 years.
Yeah.
This time around felt different because it was a little bit different in two ways. And I think this highlights some of the advocacy challenges that we're going to have as we move forward is things have become so partisan that it's different how you need to address the issues depending upon where you are located. So in Maryland and DC and Delaware, it's heavily one party centric. And we knew and we were told by our delegations that, we support the credit union exemption. We're supportive of credit unions. Um, I'm not going to vote for it. But this was the first time where the last comment that they would make is whether it's in the bill or not, I'm not voting for the bill because we're not in the room. We're not even invited into the room. Now, when you go to different states, for instance, Louisiana, where the speaker is, or Dakotas, or Missouri, when you go to some of those other areas where it's a different makeup, there was a discussion being had. But here, it was keep us informed. That was the message from our elected officials, and we had town halls with Senator Van Hollen on and Congressman Raskin and others. But the issue was for them, they hadn't heard about the taxation discussion. So that wasn't a conversation that they thought was being had or for us to worry about, but they did have our back. So, we still have to deal with that. We see that as we move forward. So that's one thing I think for our credit unions locally. There's a new one that's popping up right now is for federally chartered credit unions. This has just popped back up from our banking friends is the reintroduction of forcing federally chartered credit unions to have to fill out 990s and make them public, so they would be public. That's new. I think cybersecurity is another one that we continually are looking for some type of a standard, some trying to find you know, um, some vehicle to find some standardization. So we're not left, and our credit unions aren't left holding the bag for most of that. Interchange, another big component. Um, One of the biggest components and challenges on interchange for us is twofold. So there's the Credit Card Competition Act, which is one, which continually rears its head. Senator Durbin's not running for re-election, so he's going to continually push for this as hard as he can, for my old home state of Illinois, unfortunately. And then the other component is this idea of attacking it in different states and the district by eliminating interchange on taxes and tips. And our focus is to educate our elected officials and policymakers on why this is such a bad idea. I mean, interchange for us helps cover fraud, it helps cover the systems, it helps cover the costs, helps cover all of these different variables. And the key difference here is in most situations, state law only affects the state charters. This is different in that the Illinois law is setting the precedent for credit unions because banks, federally chartered banks, have some different language that would exempt them from this. But as a credit union issuer, regardless of where you're located, if your member does a credit card transaction or debit card transaction in Illinois, the system has to do that. And if the system doesn't avoid tax interchange on tax and tips, right, that financial institution or that merchant has 6 months to submit for reimbursement. And if you don't do it, you're liable for $1,000 fine per transaction. And that doesn't matter where you're located. So in Maryland, this has come up. It'll probably come up again next session. In DC, we fight it on it pops up and comes down. It pops up and comes down. I think that's one of the biggest challenges, but it's a new tweak. It's a new wrinkle because in these bills at state levels, it will affect you if you have a member that does business in that state.
Yeah. Yeah.
So, I think we continually CFPB issues, right? There's a lot of talk about that right now as far as the CFPB saying that they don't have the authority and they to ask for any more funding going forward after the end of the year. So, how do credit unions work in an environment where one of your chief regulators or chief architects of regulation aren't enforcing it? So, while it may be defunded, for lack of a better phrase, doesn't mean that it goes away. So, what would that mean if there was a change in administration 3 years from now? How does that get kicked back up? Do we go back to Director Cordray, where it's just, here's what I'm doing, you can't do anything about it, which is what could very well happen.
Yeah.
So those are just some of flavors of some of the things we're working on from a national level, I would say.
Okay. All right. Are there any recent advocacy wins that you're especially proud of?
Sure. Well, there's two. Well, I mean, at least in Maryland, one in Maryland was the Access to Banking Act that we worked with Governor Moore's office on. And the Access to Banking Act was we had worked with the state to try to find a way to bring fintechs in to allow them to work with Maryland residents, but not in the way of come in, work on financial technology, but do it with regulatory light, right? So you could come in, work with residents, but not have to do the same regulations that our credit unions and banks are required to use. So working with the state, we developed a program called the Access to Banking Act. And if you're a state chartered credit union and you're working and you have branches in low to moderate income communities, you get a fee credit for maintaining a branch there, or if you open a branch there. And in addition to that, they created the Maryland Community Venture Investment Fund. And what that is that's an opportunity where if credit unions want to work with a fintech, there's grants available up to $50,000 for the credit union to partner with a fintech. So it could help with your licensing or right, your onboarding, whatever those fees might be from those fintechs. But it's designed to help with small businesses, and we're going to be amending that bill to um, help us get to consumers as well. So it wouldn't just be small businesses, but it would be fintechs for consumers. Another one that we were able to do is, as you know, CRA pops up probably in a lot of your regions, and CRA popped up for us here in Maryland. And for 3 years, we were attacked, and for we were able to fight that back. Especially, there were two bills that were introduced, and both of those were withdrawn. So we felt that was a big win for credit unions because we were able to tell the story and work with our credit unions to have the credit unions tell the story. And our partner, America's Credit Unions, we were able to work with Mike Schenk and get data. And we were able to take the credit union story, marry it with the data to tell an even bigger story. And that, to me, is what advocacy is all about.
Yeah.
And then most recently, we've been trying to get public funds here in Maryland. In Delaware, it was ambiguous, and we went and talked to, we represent um, several credit unions in Delaware. So we went and spoke with the treasurer's office, and she confirmed and opened to say, yes, credit unions are eligible for public funds in Delaware. So we're working with them to make sure the language of the application to do so doesn't have any language that might be specific to the FDIC versus federal deposit insurance, things like that.
Okay. So, what challenges do you and credit unions face when it comes to educating the lawmakers about, the credit union unique structure, our mission, and other factors like that?
Mission, structure, purpose. That's the other thing that I've like to talk about too, right? So our mission of people helping people,
Yeah.
the structure of not-for-profit financial cooperative can be a little messy when you try to explain it. Um, but we still need to, right? And the other part is the purpose, right? It's like the purpose that we're in business for is to improve the financial well-being of our members' lives. The banking industry, no, and it's no slight to them, but their purpose is different. Their purpose is to maximize shareholder revenue. you don't have to be a bank user to get that benefit. As a credit union member, that's the only people that benefit from that is our members. So that I think is hard to describe to legislators sometimes because they look at just the products that you're offering, right? And it's not the what we offer, it's the how and the why we offer it. And that is the difference. So we, at least as our association, spends a lot of time communicating that difference. Just recently with the government shutdown, we spent a lot of time working with our creditors. Our creditors were so generous with their time, with everything else they had going on, providing us the stories, providing us data. I mean, over $208 million of this was just from just 32 creditors that gave us data very quickly, but $208 million to over 11,000 um, residents, government workers, is pretty staggering when you think about it. And that doesn't include, um, the fee waivers, but this is lending, and then you've got other relief programs that were some were doing food, delivery and things of that nature. And I think our credit unions help us tell that story. So we had data, we had the stories, we created a resource page that had links to every single credit union that was providing relief with a quick summary of what their relief was. But then in addition to that, we it was built out, the page was built out, and credit to Michelle for doing this, but she did all the legwork of, okay, what is the Maryland government doing? What is DC doing? What is Delaware doing? What's Virginia doing for residents? Do they have special programs, right? Maryland had a special loan program. We had information and links to that. All of the public utilities in the region, we had links to that to help guide people to where, in case they came to our site or in case the credit union pointed them to our site or the government for that matter. Um, Governor Moore pointed that out. Senator Alsobrooks, Senator Van Hollen. We had that from, of all places, uh, in Vermont. Senator Sanders had a relief page, and we got a notification that, oh, the association's name popped up. Well, what it was in his description of relief for federal workers. When you clicked on credit union relief, it actually was redirected back to our page for federal workers to find. So somehow the message is getting out, and we took a little bit of pride in the fact that they found that the resource was robust enough to utilize.
Yeah. Yeah, I mean, it really is about that consistency because you really are constantly having to share, that data, those stories on a continuous basis. I mean, as elections happen and people change. I mean, you're just constantly having to make sure that you're telling that story and providing that data. So, um, how do current and upcoming regulatory or legislative changes, along with any specific bills or policy proposals you're tracking, how do they shape advocacy priorities for credit unions and then their members for the coming year?
Sure. One of the biggest challenges is that what we might have on our radar today is similar to what credit unions have to deal with in strategic planning, right? Like, hey, it made a lot of sense this year, but all of a sudden, boom, we've got a government shutdown. We have to pivot. So we try to see what's on there, but the NCUA is a great example of what you're talking about. We have focus on, right, they're reviewing regulation. Which rules do we think they should take a look at? And can we comment on those rules? But now we have a board of one with Kyle, who is arguably he's very engaged with the industry. He listens, he shares. It When it doesn't make sense to him, he tells us. If he thinks it makes sense, he tells us. We have that same thing with our regional director on the Eastern region. He's always open to having a conversation and being very open and frank. So as those priorities, right, those can change, but those rules to again, to level the playing field for credit unions so that credit unions aren't shut out of the room and providing value to their communities. And we see that whether it's business lending or public funds, field of membership, we have these conversations all the time that as our friends on the banking side are closing branches, closing offices, and pulling out of communities, credit unions are ready to step in and help those communities, but yet you've created regulations or you're unwilling to look at um, changing regulations to make it more accessible. So affordable financial solutions are more accessible to consumers, regardless of where they are, but especially in communities that are traditionally not represented or that are traditionally neglected.
Well, I think you and I can both agree that, credit unions themselves play a very important part in your advocacy process. So what role can you explain what role they do play and
Sure.
how you get them involved in the process?
Sure. So when we meet with legislators and we meet with regulators, the first people we bring are our credit unions because we need our credit unions to tell that story, right? We're the hired guns, if you want to call it, on the advocacy side. And this goes back to one of my early lessons, and this all the way back to the Great Recession when Senator Durbin was looking at when they were creating the CFPB and they were creating the first package of relief back in '08. And at the time, I was working at Baxter Credit Union, but I was also chair of the Illinois Credit Union system. And we were meeting and talking on the phone, and our issue at the time, most people think this may be trivial, but it wasn't at the time. The bill increased the FDIC insurance to $250,000 from 100,000. Credit unions were not included, and we wanted that in the bill. And they said, "Well, it's just an oversight. We'll get to it later." And we are like, "No, it needs to be in there now." And Senator Durbin was like, "It's in there." But I'm hearing, he goes, "I'll make sure it's in there." But I'm hearing that everybody's pulling back lending and people need help now. And our message was, but credit unions are stepping forward. And we grabbed I think it was three or four different credit union CEOs to go in and talk about what they were doing. You move up to the pandemic, and I hate that I always hate talking about these stories because it's always when things are so challenging. However, when we were going through the pandemic, we needed credit unions to talk about what were they seeing, what were consumers doing, what were residents doing in Maryland and DC and Delaware, Northern Virginia, as the state, the districts were making their rules up. They needed to hear from credit unions, well, this is how we're dealing with serving consumers. This is how we're dealing with mortgage lending and deferments and forbearances and waiving of fees and providing different loan products. All of that, it's not us telling that story. It needs to be them. And when it came to that during the pandemic, one of the biggest issues was the state finally said, one of the folks from the administration said, well, hey, could you write a draft of what you think the financial um, relief should be, or, kind of the guidance for financial institutions? And one of the items was mandatory that the state had talked about was a mandatory deferment on any loan for 6 months. And our credit unions told the stories of a lot of our folks are still working. We're not getting some of the requests that other parts of the country are getting. So the compromise was if a member were to call and say that they need relief, that was enough. And that's exactly how what we worded, and there were some other things there, but the way it was worded is exactly how it was included in the governor's executive order. So those are important. And then as we went through the taxation issue, having credit unions tell the story of the difference they make in their members' lives is so impactful because it makes it real. We can tell that story for our credit unions, but it needs to be the credit union telling the story, and we need their representation. So when we're sitting in a room with an elected official or a regulator or whomever, they can tell that story of, hey, here's where we're at.
Mhm.
The bridge collapse. I'll never forget, we contacted the governor's office after the bridge collapse last year, and his comment, we were like, what can credit unions do? And we said, I don't know, but maybe we could talk to them about doing COVID style relief if somebody can show that they were affected by the bridge collapse. 42 in 48 hours, we had 42 credit unions commit to that. And we were able to tell the governor's office. And his comment was, I nor the administration will forget what credit unions did to step forward immediately to support, you know, the Maryland residents. So I think those are some of the powerful stories.
Yeah.
The pandemic, the shutdown, but then also regular programs. One of the impact reports that we put together, one of the stories was a woman that was trying to get a mortgage at a mortgage broker, couldn't get it, went to a credit union because they participated with Federal Home Loan Bank on their first time home buyer. They had other programs with the state. They had all of these programs. The woman was able to afford the house that she had been denied at other places at a lower price because of the support that the credit union took the time to walk her through. Same thing with another credit union, and someone wanted to get a consolidation loan. They didn't qualify, but they had a counseling program, went through the process, increased their credit score, paid off the loan, set up a savings program. All of those stories are so impactful.
Yeah, absolutely. Well, John, thank you so much for joining me. Any final thoughts for our listeners today?
No, I think the main issue is, thanks for allowing us to talk about these things. And I think the main message for our credit unions is, to be engaged, stay connected with your association, stay connected with each other, get engaged in the process
Yeah,
if you can.
yeah,
And when you have those stories, share them with, your members, not just your members, but share them with your association, share them with the public, share them with your peers so people can see that difference because that's what makes the difference when we talk in our advocacy work that we do.
yeah, absolutely. Well, John, thank you again. Really enjoyed the conversation as well as the insights. I'd also like to thank Know Before, a partner of Viso Financial, for sponsoring today's episode. Know Before is an industry leader in simulated social engineering testing and security awareness training to help your staff get the practice they need through social engineering testing. To learn more about Viso Financial's partnership with Know Before, contact a corporate account manager or visit the website at www.vfccu.org. If you've enjoyed today's discussion, share the episode and subscribe. Together, our voices change the future for our industry. Until next time, keep advocating. Thanks for listening and make it a great day.